Good morning. Welcome to the SaaS Finance Leadership Panel discussion this morning. Hope everybody's doing well. This is my first time doing this, and it's a little bit odd virtually, but anyway, please welcome our panelists today. We have Ada Johnson, the VP of Finance from HEAP. We have Tom Librecht, the VP of Finance from Silverfin. And then lastly, we have Nicholas Maliani, Head of Accounting at Notions. Today, we're hoping to discuss the different topics around SaaS. I mean, how exciting. I mean, you can't get any better than SaaS. We're hoping to cover the finance functions with a SaaS business model, key SaaS metrics, tools, and tech, best practice for running a SaaS finance efficiently. First, I want to introduce myself. My name is Tiffany Tran. I'm the VP of Finance for Groove. We are a B2B sales engagement platform. I've been with them for 2 years and had helped lead them through the growth where they at today. I love SaaS. I mean, I have been in many different industries, from manufacturing, semiconductor, professional service, but I have to say SaaS is amazing business model where there's no way you can get recurrent revenue years over years. I just want to share, recently I was in the middle of a Series B financing. And I have to say, as I go through the process, and I've done many fundraising, but this time was very different. Two things I took away from that was that I learned two things. You better get your foundations together, understanding those numbers so that you become credible and reliable when investors are asking. And secondly is really need to know your go-to-market strategy. So that those are the two things for me. With that said, financial foundation is very critical and key. So I want to introduce your first panelist. Nick will kick it off with his experience around the SaaS financial foundations.
Thank you, Tiffany. And very excited to be here and speak with everybody around the world. Good evening to those of you in Europe. I know that Spendesk is European based, so just want to throw that out there to everybody. Currently, I'm drinking my coffee here in San Francisco. But a little bit about me. So I'm the head of accounting at Notion. I joined Notion about 8 months ago. And before that, I was at Intercom and built the accounting team over there. I'm focused on building the foundations of the accounting and financial practices here at Notion and some of the fundamentals that kind of Tiffany touched on to help, like, say, if you were to go into a financing round or to do anything to make decisions as a business. I'm really focused on just being able to deliver solid, accurate numbers so that my counterparts such as Tom and Ada, who are going to touch later, will know that those numbers are accurate. Some of these foundations that you'll see are really dependent upon where you are in the stage of the business that you're at. But I would say at early stage, it's really important to get your books right, make sure that you have a great accountant, and also make sure that you have a good, strong cap table and you're managing your cap table and making sure that that's accurate from the beginning. Getting those foundations are just going to be super important to really allow you to focus on what's really important for your business, which is going to be growth. As you grow and you become more of a global customer, as you get more global customers and get more maybe more global employees, as now we're more working towards the dispersed workplace, it's important to start understanding the ramifications of working globally and the various compliance areas that you might need to touch on. From there, as you're growing, it's just going to get more and more complex. But I think, like, as Tiffany showed a love for SaaS, I have a similar love in terms of how simple the business model is, but you can add complexity to it. So just making sure that you're really addressing, why am I adding complexity to this business model? At the end of the day, we're all selling subscriptions. So ensuring that you are understanding, hey, like, us accountants might need to add additional fields into your databases or implement new tools to help you scale. And sometimes that complexity is worth it. But most of the time, we're really focused on like the basics, get your billing system figured out, and that will push you into being able to really get the metrics that you need from a FP&A or strategic finance perspective.
Great. Thank you so much, Nick. That was a lot of takeaway. I hope everybody jot down their notes. Next, we have Tom Librick. He's gonna share with us his experience around the financial foundation. So, Tom.
Yeah, thanks, Tiffany. So I'm heading the finance function at Silverfin. So quick introduction there. My daily focus is on finance and in the wider area, legal and most of the operational parts. We're a B2B SaaS company ourselves as well. Typical fast growth subscription business. So all of the dynamics that Nick came to describe and the dynamics that Tiffany already referred to definitely sound very familiar. And to these foundations, I mean, I couldn't agree more with Nick, right? I mean, on the financial foundations as such, super important, as you mentioned, Nick, to have your basics straight, to have your numbers straight. And to a wider extent, I would say, like when it comes to numbers, financials to me, the other big data chunk that I see as a key foundation within a SaaS company is a subscription database. As you already mentioned, Nick, like, we all do just subscriptions. Then again, we seem to struggle sometimes as well. Like subscription metrics are often, it's very common to use subscription metrics, but it's very uncommon to be aligned on them. And having that database there with the clean data to then work with your investors, somehow, some way, often people have a different definition of LTV or CAC or whatever term you can think of, and then it's just often like, the deck is cool, but can you just please share your subscription database? So just having that at hand internally, externally, for me is just like, I'm happy that we have that straight, to be honest. And that also goes back, as Nick already mentioned, to, for example, billing engine, and how do you, where does your data sit? Is it in the CRM? Is it in the billing engine? Is it in the accounting system? Where do you put your subscription database? It seems like a detail, but so far, I think that has been a very big lesson for me. It's a super key topic. On top of that, I would definitely recommend as a good foundation to have a clean data room, not only financial, but also have your legal docs at your household, your cap table, your contracting, and all these kind of things on top. It also helped me, for example, getting ready for a Series B, cleaning up our data room. We kind of detected all of the process defaults we had. So for me, that really helped me focus on priorities and what processes should we get straight, labor contracts, for example, approval flows, making sure that your doc flow is in place, etc. And a last one that was already referred to by Nick as well, I think, is the whole dimensions part, is analytics. When it comes to your financials, you typically use analytical dimensions. I would say really like at whatever stage of the company you would be entering or taking control, think about your business dimensions and really consider them wisely, because you don't want to add too much, but you definitely need the ones that you do need for your analytical reporting and for pivoting. So for example, we really shifted recently from more team-based costing to really business units, but that has a whole range of, allocation challenges and everything that comes with it. So it learned us much more. We can steer our business way better now. But if you're limited by your dimensions at that point, we could do that pivot because of the data structure and the data logic. So that was definitely a big takeaway over the years as well. So all by all, I would say, your financials, your business subscription data, and your dimensions, if you get those traits, you have the basics, your foundations ready, and you can go forward.
Well, you mentioned analytics is very key. I mean, you always have to know the number and slice and dice and everything. What are some of your favorite metrics, SaaS metric that you go to every day or every time?
For me personally, I have two metrics that I focus on in this phase of the company. The first one is the rule of 40%, which is typically your EBITDA percentage, so your burn rate basically, or your profit margin, and your year-on-year growth. And the reasoning is that the more you grow, the more you are allowed to burn. and basically adding those two numbers up and coming in the area of 40%, or at least have a plan to go towards that 40% or more, is kind of a rule of thumb. I think in general, it makes the interesting discussion. It opens up a discussion between growth, pace of growth, and the efficiency. And that really helped us in aligning, for example, budgets and validating budgets with our boards. The second I really pay attention to is the whole, what we call the ARR snowball. So not only the ARR net growth, but definitely like all of the main drivers, basically the shift from pure net ARR growth to net retention rate and all of the underlying subsets of downsell and churn and the underlying dynamics there, to make sure that we go from net business, new business acquisition, to more like harvesting mode within your existing portfolio and get new growth from there. So that are my two favorite ones, I would say, to look at.
Oh, thank you. Those are great metrics. Next, we have Ada. Ada is going to share her experience, and Ada is the VP of Finance at HEAP.
Yeah. Hi, everyone. I'm also in San Francisco, so having my morning cup of coffee. I'm the VP of Finance at HEAP. I've been at HEAP 4 years and currently oversee legal, accounting, and FP&A, and I have managed the people team as well as revenue operations in the past. So when you're at a small company, I'm sure a lot of you know, you end up wearing a lot of hats. But my passion and background is in more strategic FP&A. Previously, I was at a company called Aptus, where I built out FP&A, and I started my career at a large company called NetApp. So from a financial foundation perspective, I think Nick and Tom said a lot of things. I'll just kind of emphasize knowing your numbers and defining them. So even working with the board on understanding like what LTV is, what ARR is. A very simple example is ARR. Are you looking at committed? Are you looking at what your contracts are going to be in 3 years, or what they are currently? And making sure you're defining that. Or things like usage-based. So there's a lot more increase in business models with usage-based pricing. And so billings is another metric that you can look at with that. So just making sure you define them and then knowing that they're accurate. So when I joined HEAP, we were about 40 employees, and they had a good understanding what their ARR was, but I didn't necessarily believe it. So I even took a spreadsheet and just took all the customers and kind of rebuilt what Tom kind of called the database. And I think you can start from there and then put systems in place. You want to make sure you have a really deep understanding of those, and then you can build systems and you know then that the data is accurate. So good foundation, good definitions. And then the other, from a foundation perspective, is in SaaS, I like to say cash is king, and that's cash in. So I think Tom mentioned a billing system. That's really important. But even just looking at, how long customers are taking to pay. When I joined HEAP, our salespeople were actually doing AR. So that was one of the first things I took over. They were incentivized to get customers to pay, but I think that is more of a finance function. So making sure you understand what cash is coming in, when it's coming in, knowing your bigger payments, your smaller payments, because that's really going to help you forecast cash flow. And then I think the last thing we were talking about was financial metrics. So Tom mentioned a lot of great ones. I think the two top ones are ARR, growth especially, and then he mentioned the rule of 40. I think that's a good one. We also look at capital efficiency, which is just the cash burn over the past 12 months versus the ARR addition over the past 12 months. So I think just having some ARR metric, some capital efficiency metric, and just relying on those two as your kind of your two kind of star metrics. And then based on what your business looks like and where you are from a company perspective. So for example, we're a Series C company, and so there's been a lot more questions on our gross margin now than there were when we first started. So I think as you evolve as a company, there'll be more and more focus on some of those cost metrics versus just cohort LTV, which is really, really important as you're a smaller company. So that's kind of, hopefully I touched base on all the topics that we were covering.
Oh, great. No, I think those are all, everything that everyone here says is very key. So some of the takeaway is definitely we want to focus on having the right billing system. And I can tell you, we can have a whole sessions I can share my pain point on implementing billing system, because there's so many out there, but not all quite work the way that we want, especially implications of the different accounting compliance. And then Tom, to your point, having amazing documentations, having a data share room is so critical. I mean, life will be so easy if you just have everything together and just a click and you can be able to produce and close your round or any due diligence quickly. And so those are key. And I was one of the best practice I want to share based on, my recent years with SaaS experience. The two things for me is the go-to-market is tremendous. I find that because internally we can control costs, but externally matters such as go-to-market is so uncertain. We rely on the way the market goes, like for example, COVID, who knows, right? And so for me, specifically best practice is I want to grow that customer database. I don't care what it takes. I want to work and collaborate with all my functional partner. How can we get more customer? I want to increase those database more and more every time. And more importantly for me is reducing those churn. So the net retentions to my business is critical. If I can control those two and sustain growth over year, then I know I'm growing. The second thing for me also is as I build out the customer database, is so critical to continuously work with your rep ops, sales leader, and marketing on sales efficiency. You got to have that playbook. You got to have that pitch deck, that golden pitch deck that you can address the different segment, the different industry to bring on more customer. Because SaaS, it is all about having more and more subscription over times. So with that, I want to ask the panelists here to share your one or two best practice that you use today that help you on your daily operations and helping your business grow in general. Nick, why don't you start?
Sure. This is going to go into kind of what Tom and Ed were talking about before, but really just defining your metrics, but more so than that, like defining ownership of who owns the metrics across your cross-functional partners is really important, and who owns your systems. From an accounting perspective, usually what I've experienced at Intercom as well as at Notion, you implement your billing system, and that's usually the engineering team that first does that. And there's always a progression that moves from engineering into finance ownership, and we have completely different roles and responsibilities. So just understanding who owns what system and how to navigate those cross-functional challenges, while also understanding that the engineering team has probably some bigger priorities on their roadmap than to help out the accounting team push for new billing changes. So really just helping your cross-functional partners and working together with engineering and FP&A as well as sales ops or rev ops to help deliver value to the company is just a phenomenal best practice. Also, again, this is the second time you're going to hear it from me, but keep it as simple as possible. We all want to drive growth. We all want to really add complexity into a sales comp plan, for example. But at the end of the day, if it's easy for a sales rep to understand, they're going to know what's going to deliver money in their pocket. And that's just something that's another good example of simplicity that's going to continue to add value for you.
Great. Thanks, Nick. Tom.
Yeah, I think indeed, you'll probably notice a lot of overlap in our replies because it's simply the truth and it's simply needed. I think I would basically appreciate an attitude of somebody like Nick in the team. I mean, it's super key to have that mindset and to really think along with the business. So I can't agree more. And I think that also goes into probably what Ada will confirm and what I'm also trying to do as much as possible. I mean, you often see silos in a company, right? And that's the finance team, that's the sales team, etc. One of the reasons why I really love to do finance in a SaaS company is because of the fact that SaaS is so mathematical. If I first saw the model and the whole, you can, based on your metrics, you can really predict what's going to happen next. Yeah, I mean, that's just super powerful, but then you need to also realize that with the finance team in the company. And that's the biggest challenge, I think. Even though the metrics are there, even though you have the clean data that we talked about, then the real job starts because the foundations, I think as finance people, we can control. we implement the tools, we clean the data, we have the data set. Then bringing that data in the heads of the people, that's where I spend most of my time these days, trying to work with. I mean, recently, for example, as we speak, we're implementing Looker as a data tool to make sure that we visualize, but also that we empower people to play around with the data themselves, but then within a specific data model governance. We're also looking into, I have 2 controllers in the team, 2 business partners, and that's a bit overkill even for the phase that we're in, but that's an aware choice because I really want them to be really close with respectively the go-to-market and the R&D function, basically be almost more part of that team than of the finance team, so that they live and breathe whatever we do, and they can really, help us decide based on facts, ratios, numbers, and then obviously add the business context on top of that. And that's what I tend to call data-informed decision-making. It doesn't need to be data-driven, but we do have a lot of data points. We do have a lot of insights. And I think going from a startup to a scale-up to a mature company, you need to some way let go a bit of the gut feel, but also keep a certain dose of gut feel to be successful. And being on that verge and making sure that your finance team is pushing that from time to time is super key. And to be honest, also takes a lot of time to just, take initiative, be in the business, suggest things, help them out. And so that's a big focus.
Well, thank you. I share a lot of the same feelings that you just mentioned here. As similar to Ada, when I joined Groove, I basically also manage office, facility, legal, and HR. And I can tell you, HR is not my forte. I do enough to get by. But it's so hard when you're doing startup, you don't have all the time. So I would say I spend about 30% of my time in finance. And it's so critical, like Tom, you mentioned, having the actual data that you can share back to your functional partner so that they can make quick decisions, intelligent decisions, because you're always running, right? And so I actually try very hard to set the time, build a model where everyone can share the same data, be transparent as how everyone is doing. And more important for me is that when I see my marketing persons sending me, hey, let's talk about finance tracking, I'm super happy, because that means they see the data, they see the realistic of how we're doing, rather than the different assumptions from, in many different ways. So I completely agree with you that data is very critical, but they also must be shared, and those data must be reliable, as Nick mentions, and credible in order to make judgment from there. Ada, how about your best practices?
Yeah, I really like that Tom said data-informed decision-making, because especially at smaller companies, you might not have the data you need. One example that comes to mind is we changed the definition of stages in our pipeline. So then when we wanted to look at conversion rates, we just didn't have that data because the definitions were now different. And I think it was the right decision, but you can just look at what you have and try to make as informed decision as possible. So I really, really like that. I also think we talked about silos and not working in silos, and the emphasis on go-to-market. So because of that, your best friend should be revenue operations. When I managed revenue operations, it was great. I think, one day I wish I could have it back, but revenue operations is sales ops, marketing ops, and customer success ops, and perhaps some other teams there. But they're very data informed as well, and they're living in your CRM, and they're living in your data systems too. And so there's a lot of overlap. So I think another best practice, which someone mentioned, is who owns what metric or who owns doing what. The commission planning process is a great example of that, where ops might be creating the structure, but then accounting is doing the payout. And so there's a whole spectrum of who's doing what on that. And you want to be really clear with your ops team, just so that there isn't confusion. And then the last best practice is, people kind of mentioned data transparency. I think having a dashboard and making sure your exec team or your teams are looking at it. And, there's tons of metrics you can look at, but what are those maybe North Star 10, 15 metrics? When COVID hit, that changed for us. It became a lot more of cash in metrics versus maybe, just spend at all cost metrics to get those customers. And so they might shift over time, but just making sure there's eyes on it, I think is a best practice. And then finally, having a perspective. So, as Tom said, I think you can look at a SaaS business model, and it's probably decently similar company to company, but the numbers might be different. So here's an example. You might have a really low CAC, meaning you might have a really low cost to acquire a customer, but then your churn might be really high. So that might be sustainable for you, but for another company, their churn might be really low and their cost to acquire a customer could be high. So what are those trade-offs, and what do you want your business to look like, and where are you spending your time? So I think just having a perspective on what that should be for your business is important as well. It might not be perfect, but just having a perspective is a good start.
Great, thank you. That's I think what now we're going to do is questions. We're going to open up for questions at this time. So if you have any questions, feel free to throw out there, and we'll do the best we can to answer them. Okay. So I have a questions for Nick. Accounting is actually so critical. You capture all the data. I mean, if our data is not clean, we can't analyze them appropriately. So how do you see yourself an accounting relationship with finance and with the rest of the functional partner? How critical, and how do you embed yourself in that picture?
Yeah, that's a great question. I really think it's a handshake, right? I mean, from an accounting perspective, I'm really focused on the actuals and all of our compliance needs from an overall global perspective. And I think Tom and Ada would use my numbers to then forecast or project where they think the business is going to be. So if my numbers are off by 50%, then their margin of error, if it's plus minus 5%, is going to be way off, right? So I think it's just very, very important to have a clear understanding of how are we calculating our allocations, for example. So like, what are we putting in COGS? And Tom and Ada need to understand that, so that when we're like driving the business and trying to tell our infrastructure engineers that we need to like push down the COGS side, they know exactly what levers they can pull and how to help those partners better. And then from the overall business perspective, I think it's really about visibility. Like the more visibility that you provide to business leaders or cross-functional leaders throughout the company, they'll understand. The marketing leader will understand their P&L. The support leader will understand her P&L. It's important to kind of provide that visibility into how we're spending and how it's tracking against our targets.
Thanks, Nick. So we have a questions here, and the question is, what are your best resource recommendations to learn more about SaaS? Books, blogs, people, etc., etc. Which panelists would like to take these questions?
I can start. There's a lot of venture capital firms now that are sharing. So the one that I really like the best is Bessemer. So if you go onto just their website, they have a ton of articles, a ton of kind of what metrics they look at, and they've been really successful with SaaS companies. So if you have a specific venture capital firm you like, I'm sure they have information out there, but I've been really impressed with how much they're sharing.
Great, thank you. We have another question. This is a great question as well. What are the SaaS finance related things you got wrong at some point, and what did you learn from this? Would do differently? Awesome questions. Do you want to take this, Tom?
Happy to. I mean, what did we not get wrong, right? I think that's pretty much the summary. I think by doing things wrong, you learn how to do things right, which is a never-ending journey. Pricing is something that's been on my radar for long and still not at the level that I want to, in terms of just simplifying it and determining a pricing governance as in general, and billing engine, and in a wider range tool set, in a way that because of what we do at Silverfin, I kind of bought some time, and we stretched the time to implement an ERP. We waited for a couple of years more. I wouldn't recommend anyone to do that. Just invest in that basic tool set as soon as you can, because the longer you wait, the harder complexity and the harder it gets in general. Specifically when it comes to SaaS billing, relates to pricing again. So I would say see that as one big topic, and don't underestimate that, or tackle it as soon in the company as you can. That would be my 2 cents.
Just curious, Tom, Ada, and Nick, what billing system do you use today, or is it a system that you embedded with your ERP as well?
Personally, we use an in-house subscription scripting tool within our own platform. We have been looking into an external tool. We failed that project, the only project I failed so far, and I still am frustrated about it. The other thing, we are actively looking into other subscription billing tools as we speak, and really trading off between a focused billing tool, of which I think most of this group will know the names already, and putting that in the billing engine of an ERP. So curious about the other speakers as well.
Yeah, it's I also have to admit I also fail in the billing system selections as well. I wrote out something and it did not fulfill majority of what I'm looking for, which was promised at the beginning. So I think we can have the whole session just talking about billing system in general. So Nick, what do you guys use?
Yeah, we use Stripe, and then we also have I think one of the things that's so hard about SaaS billing is that you're usually trying to bill for a number of different customers. So most of the time when you start early, you're going to have your self-serve customers that are going to be easier to bill for, but then as you move up market, the billing gets more and more complex. So a lot of times you'll have your original billing system just won't really fit the needs for your upmarket customers. So those are the pains that I've felt. I think Stripe has done a pretty good job in terms of flexibility. I think that from a finance perspective, it's sometimes hard because you need that engineering help to really drive changes to the system itself. But I would really push for people to consolidate their billing systems as much as possible, because imagine if you have one system for your upmarket customers, one system for your self-serve, then you're constantly reconciling your numbers and you have to use a SQL union to get your ARR numbers every month, which is just not a way to run a business.
Thank you. And I think this one, Ada can help us. The statement is, hello, I'm analyzing the MRR evolution, new churn, up and down sales. How do you analyze, differentiate new MRR ramp ups over several months and MRR upsell? Which one do you take into consideration for CAC calculation?
Goes back to my definition questions or definition answers. So Tom might be able to help with this too. But again, I think it's what makes sense for your business. So what my company does, and I think what the easiest is, so the other thing is try to keep it as simple as possible. We look at what committed ARR is. So we're not like Heap isn't like a Twilio or something where it's completely usage based. So I'm going to take that off the table. That's like a completely different thing where I think people are still trying to figure out definitions for that. If you look at Twilio's S1, actually, the way they define their net retention is very interesting. So that's very complicated, and you just need to define what works for you. From a more standard MRR or ARR, committed means if you sign a 3-year deal, it's the ARR or MRR in that last month or last year, and that's what they're going to renew at. So I think because I found that it was difficult if you do it the first year and then you're kind of adding on, it just makes it complicated from a systems perspective. If you have a system that could work, then you could do it different ways. But that's how we do it right now. We make sure it's defined very clearly that it's committed. People have signed a contract. They're on the hook in 2-3 years to be having to pay that. I don't know, Tom, what you guys do or what you've seen work.
That's a good question, and I really love how you say it depends on your business. I've seen that shifting over time. To give you an idea, we were more in I would say, more transactional business in our initial core market, and when growing strongly abroad, we saw that we went more up market, more enterprise deals. So suddenly committed ARR versus ARR became a real stretch. We had a lot of bookings and go lives with land and expand deals and etc. So at that moment, for example, we decided to say we're going to report on ARR, hard built ARR, and we're going to report the bookings balance on top. Part of that was to incentivize the people to make sure that you're only rewarded on ARR, and bookings are nice. It's forward selling, but they're not counting for your attainment yet. The other one was that towards our board of investors, for example, we de-risked by saying it's a booking, right? And canceling a booking is less bad than canceling ARR. So just perception definitely plays a role in here, but I think just as you say, being very clear on what you understand, what the definition is it a signed deal? Is it a build deal? That's just super important. And then when it comes to calculating the metrics, honestly, I mean, I've learned over time that if you make a consistent mistake, you can still learn from the trends. So don't bother too much if your CAC and your LTV are like super spot on. Like you can, that's why I say like investors will ask for your subscription database and come up with other numbers probably anyway. So just be clear on how you calculate, think about it obviously, but then be clear about how you calculate them and just measure them month on month and look at the trends rather than at the exact number. And you'll learn a lot already, probably in especially in the early days of scaling. You'll save a lot of time doing so, and you'll still be impactful with your numbers in the business.
Thank you. I have a follow-up questions from an audience for you, Tom. Earlier, you used the word dimension. What does Tom mean by dimension? Do you mean metrics?
The cost centers. So the cost centers, profit centers. So specifically in our case, we divide on team and what we call a business unit, so that we can say, okay, you know, here's the P&L for the R&D team, or here's the P&L for the finance team, but also here's the P&L for the business unit Belgium or UK, etc. And that's why we try to limit them as much as possible, because probably Nick will agree that the more dimensions you create, the more complexity in accounting and more workloads. But you definitely need some how you want to present your business to your inner public and your outer audience you depend on your analytical dimensions there. Hope that helps.
Here's a really great question going back to Nick. Especially within accounting for SaaS, do you manage the topic of reconciling payments from credit cards together with payments fees together with the sales accounted for? Any hints on tools or processes?
Yeah, I mean, it's very important to do that from an accounting perspective. It's also very difficult, I'd say. I mean, the key is to really use your billing tool. It's very important to have a strong billing tool that's tied with your credit card processor, so that you're able to have a clear insight into how you're collecting your payments, knowing what cash is coming in and when, and then being able to reconcile that clearly to the bank account. You know, I think a dimension that I would add to Tom's level too is if you have a billing tool that you're really able to tie in specific, say you wanted to define sales owned versus not, you can have a way to tie in the sales ownership to specific sales that could help from this perspective. So I think there's a number of tools that do this, but I think the key is to find one that it either integrates perfectly or holistically does this for you.
Thank you. This one is very, I think it also depends on each business, but the question is recommendations, advices to know relevant SaaS KPIs according to series A, B, or C. Either Tom and Ada can take this.
Yeah, I mean, I think again, I think some of the venture capital firms have some documentation, but I think the farther along you are, the more focus on cost metrics. So like I said, Series B, C, probably gross margin and CAC. But then when you get to Series D and beyond, and then you're looking at the full P&L as well as kind of cash flow, and then when you're going to become potentially profitable. I think that's maybe less of a thing now, but I remember a time when they wanted to see kind of a path to profitability. And then obviously when you're smaller, it's much more focused on top line. And is that repeatable? So I think, there's a range of go-to-market function or go-to-market strategies, whether it's self-serve, whether it's enterprise. And is that whatever you're showing is going to be the future, is that repeatable? And so they're going to focus on metrics like sales efficiency, like your AEs and how much they're bringing in. If you're more of a self-serve, they might look at cohorts and conversion rates. So I think at the beginning, because you don't have as much data or as many customers, it's all about kind of repeatability on the revenue, on the ARR.
Right. Thank you. Tom, do you have anything to add?
Yeah, I fully agree. I think largely speaking, I mean, if you go from like seed to A, I think, initially the product market fit, so showing any revenue traction, any new markets or new use cases that you're bringing to market successfully is just the key focus, right? Then from A onwards, growth base and net growth, I think is still like the core thing to focus at. Alongside obviously with just becoming a bit more consistent, and from A to B shifting to the whole net retention rate. I still remember myself quoting things like, yeah, we don't have any churn. Yeah, obviously, because most customers joined in the last year. So it's like, they're still in their first license year, and then suddenly you see these dynamics starting. So you evolve, and then as Ada already mentioned, like the rule of 40% to me is one of these things that you shift from growth to financials. And indeed, I've seen that happening now here as well, post B. More attention for gross margin, more attention also for the percentage spent of your sales and marketing respectively and your R&D teams versus the revenue base that you have. So it's the shift to efficiency. That's I think indeed very much the reality. And also depending on, I would say, your investors, right? Like just ask them what they will focus on, because depending on, we shifted now from VC to PE, but I think depending on how long and what investor base you have, you probably want to know what they will be looking at, and most of them are quite clear as well on their expectations. So that definitely helps to accommodate.
I think that was a great answer. A follow-up questions just to fine-tune what you just said is, how long did it take for your SaaS metrics to actually make sense? Limited amount of data, user, etc., etc. Yeah, I mean, honestly, even Groove today, we are in our 8 years. We are at the Series B. I have to say that the data, when I look at my CAC, it doesn't make sense. I mean, I keep pulling 12 months average, 18 months average, and it's not making sense. So what do you think, Tom, Ada, on these questions?
Yeah, I don't know what makes sense might mean, but I think, I really like what Tom said about data informed decisions and just looking at trends. And, an example I can think of here is we wanted to look at CAC by segment. So, large customers versus smaller customers, and we don't really split the business that way. So I was just kind of making some splits based on judgment calls, but we still use that 2 years later to at least see trends. Like if you stick with a certain definition, you can see trends there. It might not make sense to an external party, but internally we're able to kind of use that to make decisions and where we want to put resources. So yeah, I think you just need to make it make sense for either you and how you're going to run the business, or make sense for your investors. And those are a little more, I think, standard metrics like CAC, LTV, and hopefully those start kind of seeing trends and making more sense. Some of the internal ones might be more difficult if you're cutting dimensions in different ways. But I don't know, Tom, what you think?
I would say the same. I mean, half of it is selecting and calculating your metric, and half of it is the story. And that's, we had a discussion earlier that we're not used to public speaking, but I think most of us are used to speaking before in front of the wider management and the board. And to me, the biggest learning is always like, okay, you have the number, and then you have the context of the story that you want to bring with that number. So for example, as we speak, we are struggling with our NPS, and we see that we have a very low NPS initially, because we have a decision maker implementing. That's meaning, that's change management for our clients. And then the first 6 months, the users really hate our tool. And then after 6 months, they start getting used to it. And after a year, the NPS is where we need it to be. So does that mean that NPS is a bad metric? I don't think so. Should we maybe segment more and say, like, we filter out the first 6 months? Maybe. Should we consider ourselves becoming better at faster onboarding? Maybe. So I would say, like, again, look at the trend. And if the trend makes sense, you'll learn a lot from that. And for the rest, I would say that's a bit your role as a finance leader as well, is to bring that story with the numbers and make sure they are put into context. And also I would say, have that interaction. And that's a big lesson for me as well. I mean, and one of the slides in my board deck is always a data governance thing, and it's an appendix, but it's always clearly saying like, this is what we've done. Here's how you should read the historics. And it's kind of a, note to self, but also a note to the audience so that you can relate to that. And if you just are upfront, I would say the data always makes sense the moment that you come up with a number, if you have the story straight.
Yeah, thank you. To what you added, and you were mentioning trends and having the right data. So one of the things came to mind is, Nick, around the CAC calculations, we have to have some assumptions as our customer support. Are they top of the line or bottom of the line, right? Because then that's create a huge swing of your CAC calculations. What do you do at Notions around the assumptions of what fall under the cost of acquisition and what's not?
Yeah, I think there's a number of ways to look at it. You can look at it at the most macro level, right? You can just take your entire S&M spend and say, hey, like, this is how much your entire sales and marketing spend is going out to market and spending to get your future revenue. And then there's the granular approach, the bottoms up approach, where you can look at, okay, hey, how much are you spending on advertising dollars and or sales costs and the infrastructure for the sales team to actually achieve revenue. We take a blended approach, and we'll look at the business in many different ways to kind of understand how we're spending and what we're getting out of it. And very, very much an accounting point of view, we don't go through a sophisticated CAC side on our piece. We're very much more focused at the macro level, and then how much is our marketing spend dollars, and what's the ROI that we're achieving from there.
Great. Thank you. So that concluded our sessions. Our audience, we're going to be moving ourselves to the SaaS table for a few minutes after the sessions. So if you're interested, feel free to go over there. I think some of our panelists may be available there if you have any follow-up questions. And again, I think our contact information is out there. So if you have any follow-up, curiosity, or just want to know, or just want to meet up, feel free to, Slack us. We're on the CFO Connect channels, and we'll be more than happy to assist in any way. But thank you so much. That was a great session. 50 minutes went by so quickly, and you guys are awesome. You're the experts in this business. So I look forward to many more conversations with everyone here. So have a wonderful day.
Thanks, everybody.
Bye, everyone.
Thanks, everybody. Thanks.
Bye.
Bye-bye.